Good afternoon, YouTubers. Welcome back to another episode of Jack of All Trades. I'm here, as always, with Kalin and Sam. Guys, what are we talking about today?
I think we're just going to go over some general market conditions. How to navigate between bull and bear markets, and what our different trading styles, what we kind of noticed in our particular plays and setups, how to change your risk levels and targets and stuff like that, and just kind of a few things to be aware of. So cover some really broad stuff because this is right now we're recording this the beginning of 2021. We've been in a pretty aggressive bull market for about a year now, and I think a lot of new traders are probably going to be really needing some good education if things kind of turn around. So it's definitely a different world. That's why the market's always adapting. You always got to keep learning. So we'll just kind of go through some information on that, what we've seen in our years doing this.
Yeah, I think new traders lately have been experiencing different emotions with the way the stock market's been doing.
Yeah, I know it's tricky. I was actually listening to a podcast the other day. I thought it was funny. The guy said he started trading in a bull market. He made $20,000 his first year ever trading. Telling his whole family how easy it was and how he's making so much money. It took him 7 years after that to become profitable again. He said he just consistently lost money for 7 years, and then he finally got it and started making money and did it full time.
Oh, jeez. I guess it was a cooking job, eh?
Yeah. He was like he was working for himself and everything, but I just found that so fascinating. He's like, oh yeah, everything was just going up, so I just see something that was moving on a lot of volume and breaking out, and I just buy it, and it kind of just kept working. And then he said it took me 7 years to actually figure out how to trade.
Yeah, that's the thing about bull markets. It makes sense to you at first if you're just starting out and you're trading in a bull market. It's like the old adage of like buy low, sell high. Like, yeah, you could do that in a bull market because it's like it always goes up when you sell it.
Yeah.
It always bounce. But like, what happens when it starts moving sideways is like it's not buy low, sell high anymore, right? It's a little bit different.
Yeah, that's when I think a lot of the more detailed stuff comes in. Like you'll obviously be able to touch on the investing side. I'll touch kind of more on like the trading side of things, like the shorter term stuff. But it's there's a lot more little things that you kind of come to head, and you got to be aware of. Like if you're doing stuff in a sideways market. I mean, a lot more factors I find, like just on my type of trading, kind of come into play. You can get away with a lot less if you're just in like a really aggressive bull market, and obviously be more careful on the short side and stuff like that. But if everybody's buying and everybody's in it, like just again in the types of trades that I do, the shorter term stuff, I mean, a lot of the stuff really just kind of goes out the window, and it just becomes a where's everybody looking, what's the most volume, and it's going to move.
So like, we were talking about this randomly a few days ago. Like, what would your strategy be if we started like say going into like a sideways market where stocks are trading in a range, because you like to like short breakouts, right?
Yeah. So like shorting spikes is kind of like my that's like my bread and butter setup. I do longs and stuff. Like I did longs for a really long time, but it's like I just for me personally, I just like it takes a lot more time to find the plays, and they're a little bit slower. And like I just like the really quick in and out, get my money and go home kind of thing. But yeah, like for the sideways markets and stuff like that, really like anytime the market shifts with my particular trades, it always takes me like first thing I do is like I'll size way down. Sometimes I won't even trade for a few days and like really get a feel for it, because generally like what I find is my patterns are still the same. Like they still play out the same. The entries and exits, I shouldn't say the entries and exits, but the points of interest are still pretty similar. The biggest difference really is like the amount of volume on everything is usually less than if you're in a big bull market, if it's a bear market or a sideways market. But the reason that I'll size down is I like to give it like a week or two just to really kind of get a feel for it, because I really focus on like one specific niche. So I know what I know, and like those are the only patterns that I really play. So it comes apparent to me really quickly if things change. So all I need to do is watch that for a few days, and then I'll say, okay, like if I'm shorting, for example, usually depending on the handful of indicators I use, usually it kind of hits, let's just say the $8 line or whatever, for example, on a stock. Like it'll open at 7 and it runs up to $8, and then I'll short it, make my couple bucks or whatever. But lately I've been seeing, it kind of, the spike kind of happens a little bit later, and now maybe usually it's only kind of going to like 760 or 770. It's not going all the way up to $8, for example. So in that case, that's something where, because in a bull market, for example, I'd be used to putting full size right around that line. So like recently what I've been doing is I keep my orders really tight. So like, I won't have like a very big spread on where I'm entering a position. Cause again, if you're shorting parabolic moves, I mean, you're not just going to pick the top perfectly, right? You got to kind of start sizing in slowly. And ideally you weight your orders higher towards the top of the spike, based on your risk. So if I'm seeing something that's, really consistent in a bull market where it's like, okay, it hits my line, it crashes, it hits my line, it crashes every single time, then I can just put full size, within a couple cents right around that area. And that'll give me a really good average. Like I can be super comfortable with risk. I can go a lot bigger on the trade, which is why bull markets are really good for short sellers as well. A lot of people don't think that. They think, oh, everything's selling off. That's great. Shorts are probably all over this. Well, no, that's not true, because in order to have a good short, you need something to run way up, right? And if it's a bear market, nothing's running. So it's really not that great for either side of the play, which a lot of people don't realize. But like the way that I would adapt on those, like those parabolic moves, for example, is instead of, if I'm seeing them kind of fall short a few times, then usually what I'll do is I'm really not looking to make as much money, because it's just not realistic to do that. So I'll size down, like, let's say, I want 2,000 shares on this short. Like maybe I'll do, like 500, 500, 500, 500, all really tight right around that main level in a bull market. Well, now, maybe I'm only going to do like 1,500 shares or something like that. And I'll split them into a whole bunch of different orders of, 250, because I know I'm going to have to start a lot lower, right? Because I'm not going to get as good an average if it's not coming all the way up to where I want it to. And I got to also realize that if it does come all the way up to where I want it to, I am going to have a lower average. So to have a similar risk level, I don't want the 2,000 shares that I usually have. Now I probably only want, maybe 1,500 or 1,200 or something like that. So it's really just a matter of, you got to be smart and you got to not be greedy. And if I see stuff that's not going to those major levels, then I still don't want to size full size, way below that, because there is always that outlier where, it could just run right into that, and then it could just blow right through that. So if all of a sudden my average is, 20, 30 cents lower than where it would normally be, and then it blows through my line, now all of a sudden my loss is, 3-4 times what it should have been, just because I'm being greedy and I'm trying to make the same kind of gains in a really, really good market, like a really good bull market, that I am in a bear market or a sideways market. So like those are some of the main things that I'll look at in my shorts. And then for longs, it's usually, the only difference that I really look for in longs is like, I like stuff that's even lower float. Like I like low float stuff for longs anyways, like almost like, micro float, like less than 10 million kind of thing. Just because they can move so aggressively and they squeeze shorts really good when they do start going, because it's such like, you can trade the float really quick. And float rotation is basically if all the shares in the stock have traded, then they call that float rotation. So if it's, let's say it's a 2 million float stock and it trades 2 million shares, then the float's rotated. And then if it trades 4 million, it's rotated twice. So if you're seeing float rotation, especially pre-market, that's a huge indicator that it's going to be a really good long play. Just because, I mean, the shorts just, they have a really hard time winning in that kind of a situation. So I'll lean my focus on the long side, even more so towards lower float stocks, more so than I usually would. And then even still, I'll set my targets. Like the entries are the same. I'm still looking for the same patterns on both the short side and the long side. I'll just set my targets a little bit more conservatively, the same thing, right? So on the long side, just because of the particular plays that I do play, usually I can get in with the same amount of size. Shorts, I lower my size a little bit, just because I am shorting like parabolic moves. So if I'm trying to get on a big range, it's really tricky to get full size if it's not pushing all the way up into that main level that I want. But if it's a long play, usually I'm looking for a break of a key level, like just like a break to new highs, or like, it's been under VWAP all day and then it reclaims, something like that, where my risk level is always going to be the same, because I'm not shorting, I'm not dip buying, because I frankly, I'm terrible at dip buying, so I just don't do it. So I'm not doing those where I'm trying to size in on the way down or something like that. Like my entries on long plays are always like right at a break of a key level. So for those, I can get the same size, but I will set my targets much more conservatively. So I might still try and hold on to a small piece. Like, again, I always size out of my position. So, if I'm getting into a play, just to throw some numbers around, if I'm getting into a play at say $3 a share, maybe I'm looking at 330, 340, 350 to sell out of my position in thirds. Then in a sideways market or a bear market, maybe I'll look at 320, 330, 340, 350, and I'll sell it in quarters. Or maybe I'll take 2/3 of the position off at 330, and then I'll just take the last like really small chunks at the higher end. So I'm still hoping it'll get to the same targets, but I'm usually taking off my size a little bit more conservatively, because on the long side, I'm looking for plays that really run way up. So I like to just take a chunk of money, and then I'll just leave 20% of my original position on there, and then I'm comfortable. I've already locked in some profits, and I can just let that run as far as it's going to, and then if it comes back down, I'm still okay, because I can just sell it for a loss, or sorry, for a small profit if the trend breaks on me.
So the longs, it sounds like you're still kind of gunning for like 5 to 15%
Yeah,
moves.
yeah. My long plays are usually higher percentage winners. I don't play them as often because I have really like really specific setups that I like for longs, and usually I'll see one like maybe like once a week, or once every 2 weeks kind of thing. So it's not something that I'm actively like searching for all the time, but the ones that I do like, I do want to see those like big, like, I'm looking for like 4, 5, 6 to 1 kind of risk reward ratios on those. So, and that's still the same kind of thing in bear markets and in sideways markets. But again, that's one of the things where I'll look at the float. So if it's a really big bull market, let's say, the float for argument's sake is 30 million shares. Then if it's a big bull market, maybe on this stock for this particular setup, I'm looking at my target and I'm thinking I'm going to make 5 to 1 on this play. Well, if it's a bear market, or if it's a sideways market, I'm looking at the same setup, 30 million shares now. I don't know what the best way to describe it is, but like 30 million shares almost feels like it's 80 million shares. Like the way it trades, it feels heavier, unless it just has like incredible volume. So I would kind of treat that a little bit differently, right? Like just the way that I kind of, it's like a little bit of intuition, I guess, which is it's kind of hard to explain, but the way that I'll trade those is I just try and basically shoot a little bit more conservatively, and I play them as I would if I was playing, say, an 80 million float stock in a really big bull market, is the same way I trade maybe a 30 or 40 million stock in a bear market kind of thing.
Interesting. I got a quick question. You showed me this guy that you're following, Kades, whatever, and
Yeah,
I was looking at his chart of the crazy Tesla trade that he did,
yeah.
and I realized some of like the shorts, or well, his orders are executed in like such crazy speed and like price to within like short distance of price between each other. Like,
Yeah.
how does that work? Do you guys have like a button and it just sell, or because you can't be like entering the numbers manually, right? And it's just hitting those
No.
numbers.
Yeah, so he like I listened to a couple of interviews with him. He trades mostly with hotkeys and stuff. So you can set up. I don't know if you probably don't have, like, you wouldn't need any for investing or anything like that, but you can set up hotkeys for pretty much anything. Like, you can set up hotkeys that are buy at the current ask 100 shares. Close a quarter of the position, close half the position. Stop loss at this level. Like, you can set hotkeys for pretty much anything. The only one that I have is a hotkey it's like my holy shit handle. It's the it's close position and cancel all orders. So that's the
Okay,
one where if it goes against me, I can just hit it really quick, and if I have any open orders, it'll cancel them, and it'll just close my position at market.
so for your entries or exits, you're still manually putting in the amount, right?
Yeah, yeah.
Because I was gonna say, because it looks like for him, it looks like he's only looking at the price action, and as soon as he sees like, okay, I need to sell here, he's not even putting the number, he's just clicking it.
Yeah, so like he might have something set where he's got like, like you could do like shift 1, shift 2, shift 3, shift 4, for like 1,000, 2,000, 3,000, 4,000 shares, whatever. So he might just be sitting there, like, again, I don't know how he actually trades, but like guys do this, where you can just sit there and, it can just be like a limit on the ask for your sells or whatever, and a limit on the buy for your buys. And he might just sit there and, watch the thing happen and just, just like click, 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 like just hit a bunch of buttons really quick, and it'll just fill him, like he might just double hit one and it just fills him 2,000 shares. And then he just sees, like, within, a second, he sees a snap down, and then he just double clicks again to fill it. Right. So, because that's what he does. Like in the interviews I was listening to with him, he said like the longest he likes to be in a trade is like 2 minutes, but he's usually like trying to get in and out in seconds, and that's really the only way you can do it.
Yeah, I was gonna say his chart looks like he's like, it's like he doesn't, because like for me when I do a trade, I'm predetermining entries and exits, right? And I'll adjust as the price slowly creeps there. But it looks like he's just doing it on the fly, like up too high, up too short, like he's just going.
Yeah, that's exactly what he's doing. Yeah, that's scalping trading. A lot of guys like to do that, right? I mean, if you're really good at it, and you can, you just catch those little moves all day, like 5 cents, 10 cents here, just all day long. I mean, you do that enough times, it adds up to, a couple bucks a share, right, over the course of a day.
So if you're playing at that time frame, are you even looking at technicals, or what is it all instinctive?
I'm not sure, because I'm not a scalp trader, but like just from the guys that I've listened to in interviews, and the guys that I know that do it, they're still kind of looking at levels. Like I mentioned to you the other day when we were looking at Bitcoin, to keep an eye on the 3-minute chart, because I find that that's, like, to me, I used the 1 minute for years and years, and it's like I didn't realize it until I started listening to other traders and stuff, and a lot of guys use the 3-minute chart. So I kind of, it took a little bit of getting used to. Obviously, I was kind of running the 1 and the 3-minute side by side, just so I could kind of get a feel of where I was in the trades. But the 3-minute chart really gives you like much clearer data. Like if you use the 5-minute chart, I find it's not enough information. The 1-minute chart is too choppy to really get clean information. There's a lot of false moves on it that can kind of bag you. But the 3-minute chart, from what I've seen, is like really, really clear. Like, you can see, like, for my parabolic shorts and stuff like that, like I can see the death candles where it just gets absolutely stuffed, and you get like a big monster wick, or the big fat red candles. Whereas if you look at it in the 1 minute, it might be like a little red candle with a wick, and then a green candle, and then a big red candle, which kind of looks choppy. But if you look at the 3-minute, it's like clear as day that, like, that's game over for the stock, kind of thing. And same with like I've kind of been looking at like dip buys and stuff a little bit. I haven't traded any of them yet because I haven't had luck in the past, but I've noticed on the 3-minute chart, it seems like a lot of the times when you get like a really big sell off, like if you get 5, 6, 7 3-minute red candles in a row, then the first time you get a good 3-minute green candle, you'll get a bounce like all the way back up to the top. Like if you actually look back at the Tesla chart from when it just dipped down there to 600 or whatever it was, if you put that on the 3-minute, you'll see what I mean. Like you get that first candle, and then that's where a lot of the guys will enter, because they see that 3-minute bar that's solid green, and then they know that that's like, now it's bouncing. Whereas if you look at in the 1 minute, you got little bars and little mini bounces all the way down. It looks kind of messy.
All right, so let's find this thing. Yeah, so it looks like it gapped down on Tuesday or today, gapped down, and then just that huge bounce.
Yeah. So you get like those solid red candles, and then as soon as you get a green candle, it bounces up, right? So I don't know if that's like a consistent thing, because like that's not a play that I do, but I mean that's just something that I've noticed. And like same with I guess it's kind of similar, like you and I were talking about Bitcoin the other day, when you do your wedge plays and stuff like that. Like you'll see big wicks because you play it on the 1 hour chart. You see big wicks that go outside the wedge, but that's not when you're entering. You're waiting for that 1 hour bar. As soon as the 1 hour bar closes outside your hourly, that's when you're it's the same idea, right? It's it's it just gives you like that little bit of extra information. It's really, really helped me a lot on the short side of things, because it makes those makes those big rejection moves really clear to see on the 3-minute. Anytime you look at the 1 minute, it's really, really choppy. And like I know a lot of guys still like the 1 minute, but I've been using the 3-minute now for, I think I started using it maybe like not even that long ago, like 6 or 7 weeks ago, and kind of had the 1 minute open beside it for like maybe 2 weeks, and then I was kind of like, what, this is like, I'm not even looking at this thing anymore. And it just like my trades are still the same, but like my level of confidence in the trades, like I just find myself a lot more relaxed because everything is just visually a lot more apparent on the 3 minute chart for me. So all I really use is a 3 minute and a line chart. That's all I look at, because I use a line chart to get my resistance levels, and then I use a 3 minute chart just to see the price action.
Yeah, and you don't stay in a trade very long, right? Like 30 minutes?
Yeah, like my longest trade is maybe 30 minutes, usually like, I don't know, 5 to 10 roughly.
That's a pretty good setup. Like a part of me wants to do that because it's like, because I'm so envious of the fact that you can do your research and then you're in and out of a play in 10 minutes. You get that adrenaline rush. It's like, I made money. It's like, now you're back to life, right?
I mean, I'm done. Like I'm usually done by like 10 o'clock.
Yeah, I know. I'm very envious of that. But like, just for the last 2 weeks, I tried playing smaller and smaller time frames. Like I used to do like the daily and the hourly, and I would never look into anything lower than like the 30-minute chart. And then
Right.
recently, I made a box in my trading view where it's like I get the 1 minute, 3, 15, and 1 hour, and I'm just trying to play like shorter moves. And I've never like lost so much in my life.
Oh, really? Well, it's
Like
different,
I
right?
just
It's a different learning curve.
Yeah, I get faked out so much, and then I respond to what I'm seeing, and it's always the wrong response. And then when I zoom out to like a 1 hour, 4 hour, like a 12 hour, I'm like, son of a bitch, I was right. It's like for some reason, the shorter the time frames I get into, the more mixed up I get, the more mixed signals I get, false signals. But
Right.
like when I zoom back out, I'm like, shit, I was always right with the move. So
Yeah. See, I would almost think that, like, because you're talking about like Bitcoin mostly, right? For those kind of things. See, like I would almost think, because like, like the plays that I'm doing, like, I'm 9:30 to 10:30 and I'm done, right? So like if I'm looking at that kind of stuff, that's when the market's opening and you're getting like that, you're getting all the volume, everybody's watching it. Like that's when all eyes are on the play, right? So I think that's why the shorter time frames and that actually work and make sense, because there's a lot of guys like me who only trade for half an hour and they're done for the whole day, right? So if that's the way that most of the people are playing, they're looking at that 1 minute chart, they're looking at that 3 minute chart, and that's dictating their moves. Whereas like something like Bitcoin, for example, I mean, it trades 24/7. So unless you're getting, like I've looked at the 3 minute chart, like when it has those like big giant spikes, and I see patterns. But outside of that, I don't like personally notice any patterns that I recognize really on the 3 minute chart that are nice and clear cut, because I think those shorter time frames, you do need that huge surge of volume to really make them justified, right? Because that, like, if you're looking at the 1 hour chart on Bitcoin, then it's just, those might be the candles that over that 1 hour, that gives you the kind of volume that you'd see in a 3 minute candle at 9:30 in the morning on a stock.
you know what? That's a really, really good point. Because now that the way you're describing it, it's like if you're playing one of these low float stocks and early morning, there's got to be a very specific group of people that play that in a very specific way. So it's
Yeah.
like more predictable. Where it's like if you do Bitcoin, you have investors playing with swing traders, playing with scalpers and day traders, and suddenly like everybody's just kind of mixed in there.
Yeah.
Maybe that's why I'm getting like mixed signals.
Right. Because, like, I mean, the stuff that I'm looking at is only people that are looking at those, 1 minute, 3 minute, 5 minute candles. Like there's probably, like, there's not anybody that's trading between, well, I mean, I shouldn't say not anybody, but I can't imagine there's too many people trading between 9:30 and 10:30 that are even using 15-minute candles, right? Because like
So
there'd be so much that happens, you wouldn't see anything.
so I have a question then. In the scenario that you're playing, who are you playing against? Like, are traders playing against each other, or are you guys kind of like collaborating like a bunch of poker players at a table, like trying to take out the fish? Like in this scenario, like who's the fish, right?
Honestly, I think it's more so just experienced guys taking money from guys that don't know what they're doing. Like,
Yeah,
because
because
like the whole idea behind small caps and stuff like that, like it's kind of like the rule of, like, the gospel, for lack of a better term, is the fact that, like, like I don't want to try and outsmart, Warren Buffett by trying to beat him trading Amazon or something. Like, he's smarter than me. So I'm not gonna try and do that. Like, I want to be in the small stuff where, there's all these uneducated people who get really excited. They see this thing that's moved 50% and they think they're going to make, $1 million overnight. And like, those are the guys that I want to play against, because, it's like at poker, like, you want to play against the guys that don't know what they're doing, right? You don't want to play against the best guy in the world because he's going to take all your money. But like if you sit at a table for 20 minutes with a bunch of guys that have never played before, you're going to take all their money, and it's going to take you a lifetime to get $1 out of the one guy who's been doing it forever, right? So that's kind of the general like mentality behind playing the smaller cap stocks. Is the people you're fighting against are generally not very educated.
Now, so why do you think they play the small caps? Is it because of the percentage moves, or because the stocks are cheap and they feel like they can get more size or something?
I would say both. I mean, that was what drew me into the markets originally to begin with. Is I saw stuff and I'm like, oh, this stock's it's $2, and it went from $2 to $5 in a day. Like, oh my god, I could put $2,000 in there and I could make a week and a half's pay like in a day. That's incredible. So I'm looking at it now, and then I'm just looking for the next one. So I see something that's it's gone up 30% one day, and then the next morning I'm getting ready to buy it because I'm like, oh, like the last time I saw this, it's going to the moon, right? And I think even in our first podcast, I told you like, everything I learned, I just did by trial and error because I didn't like basically until we started doing this podcast, I didn't really know anybody else that traded. So like what I used to do is like I wouldn't even have the charts. I would just scroll through news articles and be like, oh, that looks like it's pretty good news, and then I'd look at the stock, just all I would see is the bid and the ask, and it would say it's up 40% in the morning, and I'd be like, cool. And then I'd sit there. As soon as the stock would open, I would just buy like 500 shares, and then I would look at it for like 15, 20 seconds, and it would just, it would jump up a whole bunch, and then I'd just sell it right away and, make like $50 or something. Like that was how I traded for like, honestly, probably like 2 or 3 months. I didn't even look at a chart because I didn't know there was charts that were real time. I had zero knowledge. But that's what I mean. Like those are a lot of the people that are doing this stuff, right? So if you know what you're looking for, it's very easy to, it sounds kind of mean, but I mean it's really easy to take their money.
Well, it's like poker. Everyone's in the same game. It's all fair game.
Yeah, and I mean, like I spent my 4 years and tens of thousands of dollars to learn how to get here. So
Yeah, we've all given stacks back to the market.
yeah, exactly. So I don't feel bad about it.
You know what? That helped me clear things up about how I'm playing Bitcoin then, because like I'm obviously not playing against fish. It's too big. But I guess what I'm trying to do is get behind momentum now, right? If
Yeah.
it looks like it's in a bull run, then I'm just going to get behind that and just take a ride.
Right. Yeah, I
What do
think
you
that's
think?
probably a big part of it though, is just that time frame, because you're like I said, I mean, when I was looking at it, like when Elon bought all those shares and it spiked way up, like in that move, I was looking at the 3-minute chart and I was seeing a lot of patterns that I recognized like very clearly, like really, really good clear cut long patterns that I'll see on, these 20 million float stocks that I play, like clear as day. But if I scroll way back to like any kind of consolidation phase, I don't see anything. Like even in like the 15-minute chart, I personally still don't really see anything that makes sense to me anyways from what I know. But when I look at the 1 hour, that's when stuff starts to become a little bit more clear. Like the 1 hour, even the 1 day chart, that's when stuff kind of becomes a little bit more clear to what I know.
Yeah, exactly. I think that's why I've pretty much decided, as we've been talking about this, that I'm gonna just avoid the shorter time frames,
Yeah.
and I'm gonna go back to the longer, much longer swing trades.
Well, if it's what you're good at too, I mean, you just size in bigger, right? Like if there's no point in trying to, make $50, $100 here and there, pulling your hair out, trying to trade the 5-minute chart when, you get really good at the 1 hour chart, you just double your size and make $1,000 instead of trying to do all these stupid little ones that are just frustrating you and killing your confidence.
Yeah, because now that I'm thinking back, the period where I did the best, I was doing like maybe 3 trades a week, 1 to 3 a week.
Right.
So I'd be watching the daily for something that I recognize, and then once I recognize it's forming, then I start drawing all my lines and the fibs and looking for an entry if it's a short or a long, and then I'll go into the hourly and start doing and playing those, and I'll just hold it till like it gets near my exit, and I'll just decide, is this going to keep going or whatever. But I might go back to that. I think I got lost looking at the shorter time frames.
Yeah. And it's probably super low stress to trade it like that. Like, you just put your money in, you're going to win most of the time. And, it's easy. That's the biggest thing is you don't want to be stressed. That's why I
Yeah,
only play a couple really specific setups because I can put my money into a stock that's going to put me down $300 in 5 seconds if I'm not careful, but it doesn't stress me out because I've seen it, 1,000 times over, and it always does the same thing.
so what was your biggest loss recently?
Recently, I haven't really had any biggest losses. I've only
Well,
had no, I mean, I haven't. Like, I haven't even traded the past like 3 days because, like I said, at the beginning of this podcast, the markets are kind of turning right now, and a lot of my plays are just falling short of where my entries are. So I'm not chasing stuff down. I'm not breaking my rules. I don't need to make money every single day. So I've just been kind of sitting on my hands and watching, and I made a new folder on my computer, and I titled it like heavy market days or something like that. And I'm saving all the patterns in that folder so I can kind of keep an eye on them and get a better handle on what levels they're going to. And then once I kind of feel like I'm good with that, that's when I'll start going back into those plays. But like, it's never a rush. Like, you guys, everyone thinks they got to make, if I don't make $500 every single day, like it's the end of the world. I mean, you don't like, I know traders that trade 60 times a year and they're on their computer every single morning. And, 3 out of the 4 days of the week or 3 out of the 5 days of the week, sorry, they don't see a trade. And, maybe 1 or 2 days a week, they'll see their setup and then they'll just hammer it with absolute massive size because that's the only play that they know. And they're really, really good at it. And outside of that, they still set up their watch lists and come to the market every day and look, and they don't see anything. They say, all right, see you later, guys. 9:30. I don't see anything. I'll be back tomorrow. Like, it's, it's stress free, man. That's what it should be.
yeah, I gotta go back to that stress-free thing because I think we're hopefully gonna be out of this lockdown in a few months, like completely out of it. So I
Yeah.
need to get back to the world and stuff. I need to be able to set it up so like I can just walk away.
Yeah. Well, that's kind of why I'm looking forward to, like, like you've been kind of giving me some tips on trading the hourly and stuff like that. I'm kind of looking forward to getting into that. And like Sam, our producer for this, I know he was talking to me earlier, and he was asking me like just how to trade with contracts and stuff like that. And he was asking me how much I'm trading right now on Bitcoin. And I said I'm trading 10 contracts, which is I'm risking about $5, and I'm aiming to make maybe $5 or $10 on these trades. And said I'm probably going to do that for a couple of months, to be honest, because I don't know how to trade Bitcoin, and I'm not going to pretend like I do. So I'm starting risking $5 and trying to make $10. Like that's how you learn. Just because I know how to do one thing doesn't mean, like, I might be terrible at Bitcoin. I might never get it, and that's fine. So, but I don't want to lose a whole bunch of money trying to just jump into something that I don't know how to do.
Yeah, Bitcoin is it's so weird. It's like it's obviously a really big asset class, right? I think it does something like 24 to 50 billion volume a day in the spot markets.
Hmm.
But at the same time, it also trades like at a penny stock because on the turn of a dime, if a piece of news comes out, it could just blow up in either direction. It's like the
Yeah.
craziest thing to play with.
Yeah, no, it's cool. I'm looking forward to it. It's cool. That's like the 24-hour markets too, and like looking at those hourly setups that you were showing me. It's like it looks like they form over like half a day or almost a full day, and then the trade it usually takes again like another half day or full day to kind of play out. So it's one of those things where like I'm looking forward to it because it's I can just glance at the chart every 5 or 6 hours, and if I see something that looks like it's forming, then I'll kind of keep half an eye on it. And if I see a trade, I can just throw some money into it, set my stop, set my target, and leave it. I don't have to look at it for another 5 or 6 hours. Like it's that's that'll be my intro into more swing trading, I guess.
It's you. We're trying to stretch you out so that you can eventually get into investing, just holding for long periods of time.
Eventually, I'm terrible at that right now.
Right now, your average holding time is 10 minutes.
Yeah, if I'm lucky. Actually, I've been in that one marijuana stock for like back in like December, but I've been like trading it, like I've been in and out of it like probably at least once a week, just like trading highs and lows because I can't help myself.
I was gonna say, wasn't that supposed to be an investment?
Kind of, but I'm still trading around the core like number of shares. I've just been like buying more, selling into the rips, buying the dips, kind of thing as it goes along. So
Yeah, I got a message, like a bunch of messages this week about people because like the markets are down recently, whatever, right? And a lot of guys are like, obviously these guys don't really trade or anything like that, but a lot of them are confused as to what to do. So like one guy messaged me, he's like, um, Tesla like dropped from like the high $900 to like 700 something. That's when he messaged me. He's like, dude, should I sell now? I'm like, why would you sell? Are you an investor or like trader? It's like, yo, I'm investing. Like, why would you sell now then? Right?
Mhm.
He's like, well, if I sell now, I could buy it back at like 600. I'm like, what if it doesn't go back to 600? Like, you don't know. You don't know, right?
Yeah,
You right. So it's like if you're investing, like today's price should not matter whatsoever. The main question is where do you think the price is going to be 5 years from now? Where do you think the price is going to be 10 years from now? And if you actually do some research and fundamentals and you say, yeah, it could reasonably reach that price, then what do you care if it's 600, 800, 900 today?
Yeah, I think a lot of people just get scared, right? Like, you see it's that paper profits too, right? Like, you see like the more money you got into the more you might be in something and it says you're up, $50,000 green, and then all of a sudden it drops $200 a share. And now you're only up $30,000, and like you haven't actually earned anything because it's all paper profits, but like it still hurts. I mean, you in a perfect world that number just keeps ticking up perfectly in a linear line, right?
Yeah.
But
Yeah.
I mean, like you just nailed it on the head, right? Is it, are you an investor or a trader? If you're an investor, then like don't even worry about it. Like a lot of the guys that I know that are only investors, like most of them even only look at their portfolio once a month. Like they just get a printout once a month and look at it and say, oh, did good this month or bad that. Like they don't even look at like the week to week price action, let alone the intraday. Because like
Yeah.
they don't care, right? It doesn't matter.
Yeah. I think people like get caught up in like what not only like how much money they made, but like what can I do with this money? Like if it hits this point, like I think people start imagining, right? If it hits this level, maybe I'll sell some, I'll do something with this money. Like they start just running away with it, right?
Yeah, but that's not the idea, right? Like that's not how you want to think about it. Like that's why I always tell, like a lot of, like some of my friends that are kind of new to it and they're new to like trading and investing and stuff like that. And like, oh, like should I put some, I got like $1,000 sitting aside. Like should I put some money in Bitcoin or should I put some money in Tesla? And I'm like honestly, like you should probably just save your money if you only have $1,000 to spare. Like you kind of want to like it's got to be something that you're going to be able to put away and not touch it for 10 years, like kind of thing, if that's your plan, right? Like, you don't want to put it in there now and then a year from now it's dropped 10-15%, and then you don't have enough in your actual bank savings account and something happens, you got to buy a new air conditioner or whatever, and now you got to sell that thing for a huge loss. Like it's got to be money that you've thought about, and I'm not an investor, but I'm smart enough to know that, but it's got to be money that you're ready to say, okay, like I'm going to basically bury this in the backyard and I'm not going to touch it for the next decade. That's what this money is. It's not like, oh, it's gone up, let's sell it and take a vacation. Like, you got to think that's my retirement fund.
Yeah, I think people should look at investing as more like almost like a savings account where you're going to get some interest at the cost of some possible risk,
Mm-hmm.
right? Whereas like it's not like people might look at it as some kind of money generating income kind of thing where it should really be looked at as like a savings account where this is money you plan to save, you don't have a need for it, you're going to just leave it there, but you want some interest or some yield out of it, so then you look at some growth stocks or your dividend stocks, and then that's the end of that.
Right. Like, I mean, like you do this all the time as an investor is, when you're in something that long term like that, anytime you see a big dip, you're looking to buy more. Like that's an opportunity, right? Like it's not a panic moment. I mean, think about, March of 2020 when they had that huge drop. Like, just think about the S&P, for example. Like if you're just in an index. I mean, if you've been holding that index since, 2010 and it's been 10 years, and all of a sudden you get this big, whatever it was, 100 and some odd dollar drop, and you got an extra 20 grand kicking around that you're kind of planning on putting in stocks, and just buy a whole bunch more. I mean, that's a huge opportunity to make a ton of investment money really fast.
Yeah, and I've been thinking about how to do my portfolio of like going forward because of 2020, that dip, and I was in like 63% cash at the bottom of that dip. So then I captured like a lot of that, right? So my portfolio grew pretty well, but I think I start to realize at a certain size, I realized sometime around towards the end of last summer, my mentality of my portfolio flipped. Like originally, like because I went all in on Tesla like 2016, 2017, like that's right, and that's like that's the complete opposite of diversification, which is what people say as an investment you should do, right? Like I just went gun ho in one stock, and then but what I realized, but it was because like my portfolio wasn't as big as I wanted to be, and I knew Tesla, for me, I knew Tesla was a winner, so I like let's go all in on this and see what happens, hold it for 10 years.
Right.
But last summer, my mind flipped, my mentality flipped, where it's like at this level, it's not about gaining returns anymore. It's more the important thing is preserving capital. Like I've already
Mm-hmm.
gained this much. The idea is now I have to preserve what I've got,
Right.
right? And I kind of woke up a few months ago. I looked at my portfolio. I think I had four things in my RSP, and Tesla was 75% of the entire portfolio, and I was like, holy shit! Now I understand. Now I understand. Like when hedge fund managers are saying I'm overweight the stock, or I understand what that means now, because it's like, yeah, your portfolio is of a certain size and it's looking like it's doing well, but if you look underneath and it's like one stock is like 75%. If that thing tanks, you are done,
Yeah, I mean
right?
that's the thing, right? And obviously, the more money you have, the easier it is to diversify between a few things, right? Like if you only got 20 grand kicking around, I mean, if Tesla is going to be that thing that you're super confident in is going to go up, a couple 100% over the next few years, then sure, throw all your money in there. But when you start having bigger and bigger and bigger sums of money to put around, that's when it's really just a safety thing. I mean, like like you said, I mean, who knows? Like I can't think of any catastrophic scenario off the top of my head, but like, the one thing I always kind of reference is like, the World Trade Centers. I mean, like, catastrophic stuff does happen and that affects the markets, right? Like a global pandemic, like, like who knows what's going to happen, right? So that's why it's always good to be like, you have a little bit in tech, you have a little bit in industrials, you have a little bit in consumer, like whatever. It's just, the more spread out you are, like then you can have a stock that's, you can have one section of your portfolio that's down 20%, but overall, the 2/3 of the other half of your portfolio is up, 12 or 15%. And then, overall you're okay. Right. So, and then eventually whatever's going on in the economy is probably going to, dwindle away. And then this other stock that's been way down is going to come back up and then you're going to be back in the green. Right. But there's
Yeah,
always, especially if you're you are planning on using it as like a retirement fund. It's just an insurance policy, really. Is just to diversify and not all your eggs in one basket. It's no different than business. I mean, if you're let's say you're a factory and you have 50 employees and you're, I don't know, you're producing pens or something like that, and Bic pens, like that's your only customer. Your factory runs 24/7 making Bic pens, and you have 50 employees, and then all of a sudden you lose that contract. That's your game over. Your whole company goes underwater. You got to sell it. You got to fire everybody. Like, it's no different in business. Like trading stocks and investing and day trading and all that stuff is the exact same thing as a business. It's just individual.
yeah. And I think like what I realized, like, since we're trying to like give advice to people that are just getting in, or from my end at least, for investing, like, because a lot of people, like, I think they kind of go into the mentality of I want to trade because it has this aura where it can make more money faster, whereas investing is a little bit slower. And I
Mm-hmm.
and I think at some level that's true. But like from my own personal experience, I can't recommend this to anybody. My personal experience is like, because I get it. I started with very little originally, right? So it's like if I started and I put my money into a blue chip stock or a dividend stock, now it's been 10 years, I might have done a 2x, right? And that's like Microsoft. Microsoft did a 2x in the last 10 years, right? Great company, profitable, but not very. So like if I only had $5,000, 10 years later, I've got $10,000,
Yeah.
adjusted for inflation, that might be, break even.
Right. Right.
So like, I think what works for me, and I think could work for other people who start off with very little, is just roll up your sleeves and do your homework. Find that growth stock. Like growth stocks are very easy to identify, right? Find any industry that's new, that's growing, that's nascent, which means there's almost unlimited cap size for the whole industry to expand, right? So
Right.
like right now it's like renewables, electric vehicles, genomics, 3D printing, things like that.
Mm-hmm.
Find Identify who the winners might be in that space. And like in my case, I didn't go all in, but because I had Apple, but I did go, I think, 20% into Tesla for a few years, just because this was like 2020. They just announced the Model S.
Okay.
So I knew this company was making progress, but it was still not worth the total risk. So I put most of my money in Apple, a little bit in Tesla, about 20% in Tesla, and I just watched. And by the time 2016 hit, uh, and I gathered like 4 years of information on this company, I'm like, they are trending very well, right?
Mm-hmm.
Despite all the naysayers online, like if you look at just the straight facts, they're trending very well.
Right.
So then I went all in on that, and that very quickly, like, you know, and you could look at the chart of like any of those stocks right now, anything that's in EVs, that's in 3D printing, genomics, those stocks do move quite a bit. Like they'll do like 100% in a year, 400%, like every new breakthrough. every new piece of progress, like solid progress, fundamental progress that they've made, these things go up like 100%,
Right.
right? And I think that would be like the optimal way to start is to get behind one of these guys, 5x your portfolio, and then diversify for safety,
Right.
right?
It's also a lot of research too, because like, I'm thinking of it just as, as far as like doing stuff like that and trading and things like that, the reality is like if you are going to get to a level where you can do this and make a lot of money by yourself, I think you do have to have like an absolute passion for it, right? Like, I mean, you and I message each other all the time. It's like 11 o'clock at night. I'm going to bed and something just pops into my head about some pattern I saw a week ago, and I'll text you about it, kind of thing. Like it's literally like both of us are always thinking about it constantly. So for people that aren't really interested in learning any of that, for like even for me, I mean, like, I have no interest personally in sitting there and reading through company, protocols and management and all that kind of stuff. Like, quite frankly, it bores the hell out of me. So that's why I haven't really gotten into investing. But that's the kind of stuff that you love, right? Like I like statistics, I like math, I like patterns. That's what I was really good at all through school. Like that's what entertains me and stuff. So that's where I put my focus, right? But so there's no reason that you can't become some level of trade. I mean, there's a million different ways to make money in the market. So you can absolutely become some level of trader, just following what you enjoy. But I think the bottom line is you really do have to enjoy the markets and researching stocks and companies and economics and how all this stuff works if you are going to be able to do it yourself. Because like again, if you're thinking, okay, I got $50,000 or $20,000 or whatever it is laying around, there's nothing wrong with just putting that into Amazon, or splitting it between Apple and Microsoft and Amazon, and you get your whatever 5, 6, 7% or whatever it's going to be per year. That's still, in my opinion, is better than a bank account, because you're never going to get that kind of growth in any kind of bank or interest account. Like, it's just not going to happen. So if you're not that interested, I mean, you can just pick the main stocks that everybody knows are good and safe, and you're going to get that steady growth, get some dividends, whatever. I mean, that's fine. Or you can give your money to a fund manager and they can handle your stocks or whatever for you. But like, again, the bottom line really is it's something that I think everybody's got to be in, because it's the only way to really make your money make money is, I think, the stock market and real estate. Or like, if you're going to just put your money somewhere, those are the two places that it's going to turn into more money quicker than anywhere else.
Yeah, 100%. I think, and I'm just reading up more about it recently because I bought a few myself. But I think ETFs are an underrated. I don't want to say asset class, but like an investment option, because
Mm.
because I know esports is going to be big. It's already big and it's going to continue to grow, right? But I'm so sick and tired of researching new stuff, that I'm like, I don't want to research in esports, but I want to
Right.
be a part of it. So then I found an ETF that has a basket of like esports companies, software like gaming companies and stuff, and I looked at their track record. It's fantastic. So I'm just going to dump my money. It's almost like putting your money in an actively managed hedge fund, but way less fees. It's like a 2% management fee, like
Yeah.
1%.
Right.
So like I think I could definitely recommend that as an option. I don't care about I don't want to do research in it. Just park my money there.
Yeah. Just it's a sector that you're interested in, and you have
Yeah.
an idea that it's going to grow, but you don't really want to spend the hours digging through everything trying to find that perfect play. Because I mean, it's fun. Like I don't know what the best way to put this is, but in like, you could disagree with me, but in my experience, I think for something that you're going to find personally, the longer that you're going to be in the stock, the longer it's going to take you to confirm your theory that you should be in that stock, right? So like, I'm not talking about all the background, like the train, like all the years that you and I have spent, testing our theories and the learning curve and all that kind of stuff. But like, for me, for example, like, I can spend an hour a night and I can have 4 or 5 stocks ready to go that I know I want to trade, because it's going to take me 5 minutes to do the trade. Whereas for you to, be like, okay, I want to put my money in this for 10 years, that's probably going to take a little bit more than an hour for you to confirm your theory and be confident enough to make that trade, right? So there's that level of it as well. As the longer that you're going to be in something is going to take you a lot longer to research it.
Yeah, and I also have to like at least update myself on the fundamentals of the stock like at least every quarter. So like I'm in XPeng. XPeng is probably my most high risk holding right now. Um, and like they're a new EV company, so they're a growth stock. So then I have to at least check up on them every few weeks to see how they're progressing. Like, because they're building out factories, I want to know there's no delays. I want to know they don't have any funding issues, stuff like that. So yeah, I do have to, but it's a lot less. It's a lot less work though if you do the original homework. You just kind of like you just the new stuff you're looking at just kind of confirms or denies your old theory. And if it's denying, then you got to think about an exit.
Right. Yeah, which is, to the same token, that's very similar to what I do. I make my plan the day before or the night before or whatever, and then I'll look at it in the morning, and out of my 5 stocks, maybe only one is actually confirm my theory of what it's doing, and then I just delete all the other 4. Don't even worry about them, right? So it's a process you got to go through, and then you got to narrow it down, and it's really about just picking the best ones. Like, a lot of people always think, I got to be in everything. I got to be in this. Like, oh, this is moving, let's jump in. That's moving, let's jump in. Like, that's the way to lose money in the markets. So the way to make money is to take your time, relax, figure out exactly what you want to see happen. If you don't see exactly to a T that thing happening, then I wouldn't take the trade personally. I mean, if I see something that's a little bit weird, I mean, I don't want to lose money. I'm just going to say, you know what, that's a little off. I don't like that. If it does what I thought it was going to do, whatever, but that's not what I'm looking for. So just forget it, right? And it's, I would assume it's the same thing for investing. You might, you might be looking at 20, 30 different things in a company, and out of those 30 different things that you need to see to meet your criteria, maybe one of them's kind of okay, and maybe one more of them isn't really that great, and that might be enough for you to say, you know what, like, fuck, I did all this research, I spent all this time, but like, you know what, at the end of, I've been looking at this thing for 2 weeks, and I just saw this, and that just destroys my whole theory. So but I can't just take the trade now and hope for the best, because that's not my theory.
Yeah, so I actually got a story about that. It happened really recently. I went down this rabbit hole about 2.5, 3 full days of research, and I went like full circle. So I'll start off by saying like I've never been interested in Nvidia, the graphics card company. Like, I build computers and this and that. I'm like, yeah, it's graphic cards, whatever. It's not sexy, right? I don't know if it's a growth industry, so I've always kind of ignored them. And then one day I was watching this segment on this company called Mobileye. So Tesla used to be partners with them, and they make self-driving software and hardware that you plug and play into a car to give it self-driving capabilities. And they're like they're claiming to be one of the leaders in the industry. So I was like, wow, maybe I should look into these guys. Turns out Intel bought them like 3 years ago. So I'm like, oh shit, maybe I should buy Intel. So then I started going down this line of just research, and I realized and I started to realize that this company might be on the way out, because last year they had 5 major automakers kind of testing their equipment. This year they haven't announced any automaker testing their equipment. On the flip side, every automaker that says they're going to implement AI has mentioned another company. Some of them are Nvidia, some of them are other companies, but Mobileye isn't even in the conversation anymore, right? And then I looked into Nvidia because a couple of car companies decided to get into them, and I started. So my process is I started flipping through the last 3 quarters and the last 3 years of earnings calls and reports and things like that. And Nvidia is quite good. Like, they'll give you a lot of detail into like where their market's trending and stuff like that. And I realized I didn't know anything about this company. They actually have like 3 revenue streams that I had no clue about. Like, they trend. So like Amazon, Google, those guys, they do cloud computing, right? So you can buy like a computer. These guys are going to do cloud computing with GPU. So if you need to rent graphics processor power, you can rent it from them instead of computer power. So, and that's a growing industry for them. And then the more I looked into it, the more I realized these guys might be like the Windows of self-driving. It's just plug and play hardware and software. They make the cards, and you just plug it into a car. And I'm like, wow. So then, yeah, like, that's like that was like one of those things where it's like I went into it with one idea, and I came out with a whole different idea of which stock to invest in. But I did get into Nvidia, and it looks like my timing was right. I mean, I think they're going to report earnings like right now. Oh shit, maybe their stock went up again. Let me see.
Yeah, it went up. I had the report before we did this podcast.
It went down about three and a bit.
Oh, went back down? It was up after hours.
Yeah, after hours. So they beat revenue by 61%, but they're down 4%. Like, the market's definitely spooked.
Yeah.
Like, they beat earnings by 61%.
Earnings are the weirdest things. Like, everybody just bought, like, the stock always spikes into them, and then even if it's great news, it's better than everyone thought it was. Half the time it crashes.
Sales were up 61% year over year, and the market's like, nope, not good enough.
Yeah, exactly. Yeah, what is that? Like, no, we want 200 or it's not good enough.
It's like, what was the market expecting? Like,
Yeah.
oh man, that's hilarious.
Oh, maybe
But
I'll buy some.
yeah, I mean, for me, like this is somewhat disappointing, but it's also a buying opportunity because if the stock is going to continue going lower, and it's confirmed that they're growing revenue, like this is fantastic news as an investor. I just want to put more money into these guys.
Exactly. That's what it all comes down to, right? Because you're looking at the 10-year play on this. So you see a big dip like that, and it's like, okay, it's not panic, it's perfect. Buy more.
Yeah, and I'm slowly trying to develop a way where my investment portfolio, I'm going to manage it almost like an active hedge fund manager, where I'll have several core positions and I'll shave it off. Like, so active managers, the most popular ones will like not let a stock hold more than 5% of their portfolio. And every time, let's say Tesla overperforms and it becomes like 7% of their portfolio, they'll shave off the 2%.
Hmm.
And then if it dips, they'll obviously buy back in.
Okay.
So, I mean, I won't do that, but I will take that idea where it's like if I see a stock is overperforming, I might take some profit, look at some exits, get some free cash flow, and
Yeah.
then either save that for like a pullback or just maybe keep an eye out on other opportunities. But I'm 1,000% sure my days of being all in on either one stock or having all my capital in a stock is over. I think I'm going to keep at least 10 to 15% of my portfolio in cash from now on. And I'm
Mhm.
just kind of like, because I realized like in the past few months, cash is opportunity. Like when you could see all the opportunities in the world, but if you don't have cash on the side, like it's really just useless.
Yeah, and then it's just frustrating because then you want to sell something and to get money to use it, and then you can't sell something, or you do, and then you're kind of upset because now it's going higher and you're not making that extra money. And yeah, it's always
Yeah.
I always want to have a little bit kicking around just in case.
Yeah, so like I think this is my counter argument to people that are saying like, or including myself, where it's like you see a stock going up, you're like, should I sell? Shouldn't I sell? And it's like maybe you should because next time you need the cash, like if I want to buy into Nvidia now, but I never sold Tesla on the way up, I'd be like, well, Tesla's down now. Am I going to sell it at less value? You
Yeah,
know, so now it's like a double negative, right? I'm selling
yeah,
it for less value, and so I think
yeah.
it's very important to have cash on the side now.
Yeah, and like that's kind of like again, if you're actively trading, kind of like we are, then you can start to recognize those moves. If you see one of those big shoves up, then you know that it's going to come back down to some degree. I mean, maybe you're only going to make 2% on that little piece, but regardless, you sell off 10, 20 shares or whatever, and then buy it back 2% lower, and then you've just profited 2% in cash. Like why not? So
Yeah, I may not even do that. Like I may shave off like the high performers, and like I might not even look back to buy it. I might just keep it on the side for like new opportunities.
mm,
And if Tesla pulls back like a 30%, like in the last few weeks it did, then I'll buy back into that. I
right.
think so. So it's like even less. It's like even more long term view, even more like range of price movements.
Yeah, yeah, yeah. Are you interested in getting into like any kind of like dividend things or anything like that, or are you just purely like growth stocks?
See, here's the thing. Like, if I do the math, like, let's say I find a dividend stock that pays 6% yield.
Right,
If I feel like the equity that I'm gonna put into will can average better than that, then then the math doesn't work.
right. But on the flip side of that, you could be if you're getting, if you have enough money in a dividend stock, then you could be getting payments regularly that you could use to buy other stocks, right? Which could be bigger growth stocks because that's free cash, right? If you're in Tesla or something like that, it's not paying you dividends. You're making more paper money, but you can't use any of that to put into something else, right?
Yeah, it's an interesting thing. Like, I do have one buy order for a utilities company. Yeah,
Hmm.
because they're renewable, so that's like one of the industries I'm interested in.
Yeah.
But that's like the only one. And the thing is, like, they really don't move. Like a 10% move for them in a year is like huge.
Yeah, those
Um,
usually just kind of go like most dividend stocks that are half decent. You're getting like 5% yield, and it'll grow like 2 or 3% per year, kind of thing, right?
yeah, so like I'm like I do have a few. I'm sure I want more to be on my radar, but
Right.
yeah, there's a lot of variables with that too. Because like, what if the economy goes into a downturn, like a recession kind of market for like a year or 2 years? Then a lot of these companies might reduce or even cut their dividends.
Yeah.
So I mean, there's a lot to think about.
Yeah. Yeah. So obviously another way you can get more disposable income if you have the capital for it.
Oh, actually, so actually, because I know why I got that thought, because I got burned by because of
I
it.
wish. Sorry.
Ford Motor Company.
Oh, really?
I got burned last year this exact time. Well, maybe about a month back. I saw that Ford had dipped from like $15 to $10,
Yeah.
and I had some free cash from selling Tesla on the way up to 1,000. So I looked into Ford. I'm like, oh, geez, these guys pay a pretty good dividend. And I looked into the company. I'm like, this could be. So the second most profitable type of stock outside of a growth stock is a turnaround stock, a company that's doing poorly, and then now they're going to start cutting costs and then kind of reshuffling their business model a little bit and fly back up. So you can kind of ride that for the next 1 or 2 years, right?
Okay.
So I identified Ford as like a turnaround stock. I'm like, this might be pretty good. So I got into it, and so I bought some shares. Thought, worst case, I'll get a dividend. And then right when that happened, freaking COVID happened. They're like, yeah, no more dividends. And the stock price tanked to 5%.
Nice.
See, because what I learned afterwards is like dividend stocks, companies like dividend stocks like being held by like pension funds and like these
Yeah.
slow moving funds are kind of designed not to lose money, just kind of not be at risk to inflation.
Right.
So, but the second you're not paying the dividend anymore, you're like, see ya.
Yeah. 100%. Yeah, like that's anybody that's in like retirement or old age, like that's it's all like probably 70% of their portfolios would be like dividend stocks and GICs because they don't pay you a whole heck of a lot, but they're super safe, and you get your couple bucks every now and again, and that's really all you need at that point, right?
Yeah, so I think I got a little PTSD from that trade.
Kind of like me with options.
Yeah, yeah. I mean, so I got out of that by dollar cost averaging down to $5. I bought an equal amount of shares, average price like 750, went back up to like $8, and I'm like, I'm out.
Yeah. Nice.
Yeah. So yeah,
All right, you
I think
want
we
to
can
maybe
need to wrap it up today.
Yeah,
Yeah.
not about an hour or
Cool.
so.
Cool.
Sweet.
Sounds good. All right, YouTubers, we're out for another episode of Jack of All Trades. Thank you for watching.
Thanks.